Hello, this is Steve Malone with CompsFX. I hope you're doing well today and you're getting some good trades. Today we saw a massive amount of movement out of the dollar today. It all started off with the ECB press conference where Mario Draghi, the president of the ECB, came out and made comments about some improvements seen in the Eurozone and some non-standard measures that the ECB was willing to take to strengthen the euro. As a matter of fact, he made comments that lead traders to believe that there's going to be some improvement in the Eurozone. One of those was an increase in the potential GDP forecast for 2014. Well, with that being said, and given the weak data we've recently had in the dollar, the ISM manufacturing number below 50, ISM services number down, unemployment at expected levels, well, that gave a reason to push out the dollar. I think there was another thing today we saw was the fact that a lot of institutions were positioning themselves in preparation for tomorrow's non-farm payroll. Well, that being said, we saw quite a bit of movement in the DOTS trade, especially for those of y'all who use the DOTS Guppy method. And so today I've had a number of folks write me and ask me, what do you do when you go beyond the DOTS levels? How do you determine the next target? Well, there are a couple of different ways to do that. And one way is to stack the levels. I'll show you that in a moment. Another one that is a truism that I found in trading is that price has a tendency to go back to where it's been before. So you're going to want to go out to a 4-hour chart or daily chart. Specifically today we had to do that on a few pairs to see a level as to where the market had been before, some support or resistance level. So let's take a look at what to do when the market moves well beyond the DOTS levels. And I'm going to be using the DOTS Guppy method. Here what we have is the DOTS levels, and these are the Guppy multiple moving averages. And I have to say, in my 20 years of trading, I've never seen the number of traders do so well with a model in such short period of time. The beautiful thing is the dots gives you the levels as to where to enter and exit the market. You simply follow the guppies in alignment with the dots. So today when Mario Draghi started talking, we had a lot of this up and down movement. The market pushed up, and some traders who got on really early at the buy entry level here actually traded up here almost the buy target number 2. Those of us who waited through the news had the opportunity to see it slide back down, the price that is, slide back down to the buy entry, and then push back up, and the Guppy multiple moving averages held intact, giving us a good indication of the direction of the market. When you have the short-term moving averages in the same direction as the long-term moving averages, you're pretty well good to go. So there's an opportunity to trade up to this level, which is about 31 pips. If you want to learn more about this method and join other traders doing well with this method, go over to www.compassfx.com/dots to learn more. Well, let's take a look at how we determine additional targets above the buy target number 2. One way to do that is simply to take the difference between the buy target number 2 and the buy entry, and that's 31 pips. And then you stack that distance, you keep stacking it up. As a matter of fact, in this case, you can see that the market moved up and settled right near that first one. Then we had that very strong push. Now this was during the European close. Some additional news came out and there was a mass exodus out of the dollar as major institutions were preparing themselves with positioning going into tomorrow's non-farm payroll. A lot of push out of the dollar. We saw the euro, the pound, the Aussie dollar make strong moves to the upside. And as a matter of fact, not only did it do it one level above, it did it twice above. You can see that stacking it twice up, you can see where the market settled right close to that level there. And then this pin high, I just stacked it again. So each one of these bars represents another 31 pips above. That's one way about doing it. Now, like I said, price has a tendency to go back where it's been before. So it's good to go out to the 4-hour or the daily charts to take a look at to where the euro's been. In this case, let's just simply look at the daily chart of the euro dollar, and there's two levels that we saw the euro go to today, and that was the May 1st high. It went right to it, 32.43, pinned right at it, and it kept on pushing up. Well, as you look back in history, you start looking for additional highs. Well, it pushed up to this high that we had back on December the 19th. It was actually 33.07 over here, but the market today went up to 33.05 and has come back off of that. So look for that when you're trading and it goes beyond the dots levels. Look at your 4-hour chart or your hourly chart or maybe even a daily chart and try to find that next higher level. Now this also happened in the dollar Swiss today. Using the same method of stacking the levels, you can see I took the difference between the sell entry to the sell target number 2. That came out to be 39 pips. And I simply stacked the levels down. So that's 39 pips below, another 39 pips down here at 92, I think that's 92.77 or very close to it. And then down here at 92.37, 92.38 area. And you can see how the market worked down. As a matter of fact, it did it a double like the euro and kind of settled here a little bit, and then we've pushed up since there. Look at the CAD. Similar situation with the CAD. Interesting with the dollar CAD today, it actually pinned right down to the second 32 pip distance. Again, the distance between the sell entry and the sell target number 2 being 32 pips. Just stack those down, and that helps you determine that. Now let me show you the yen. The yen really fell off the cliff. And the distance between this right here is just about 40, like 39 pips, 40 pip difference between these two, but that'd be a lot of levels. And this just moved down to, in my opinion, an expected level, but then we got a lot more push, as if the BOJ just kind of stepped aside and let the dollar yen just fall. Now part of this was due to the dollar index. The dollar index today started out about 82, danced around 82, then dropped down to 81.50, and that helped push the initial move. When it broke 81.50 and pushed all the way down to near 81.10 today, that was the follow through. With the dollar index dropping, something you should monitor is when the dollar index drops as hard as it did today, it's going to affect a lot of different financial vehicles. It's going to affect stocks, bonds, commodities, as well as the currencies. Across the board, and a lot of the indices it affected with the dollar index falling like it did. So with the dollar index making that last push down like it did, breaking 81.50 and dropping to about 81.10 area, that encouraged more movement down in the dollar yen. Well, in this case, when it pushes so far away, it's really good just to go out and look again at a 4-hour or daily chart. Here happens to be the dollar yen daily chart. And we see that it pinned down to a low that we had back in April, about mid-April, April the 16th. It pinned down here, and then now it's settled at the lows. We had these 3 lows we had back around the 1st of the end of April, the 1st of May. So a complete turn right back down into this area. I'm a little surprised at the amount of movement that we've had, but we've had some disappointing news out of the BOJ and some disappointing comments by Prime Minister Abe, which has led to what was supposed to be a correction in the dollar yen now has been seen as a potential reversal. Some are anticipating a possible move down even further, down towards 93, which would bring it down somewhere into this area, these lows right here. So I'm not sure if we're going to go down there, but if the market continues pushing back down, that's a possibility. So be careful in the marketplace. I just wanted to show you 2 different ways of determining what to do when the market goes beyond your dots levels. Count the difference and then stack them, or simply go back and look at a 4-hour or daily chart and determine previous highs or lows. Well, this is Dean Malone with Compass FX, hoping that you get some good trades using the dots Guppy method. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.